Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to U.S. Markets Wrap with me, Ryan Huang. We've got a bit of a pullback overnight on Wall Street. The S&P 500 lower by 0.3% to 6,371. We've got the Nasdaq Composite slightly down 0.4%. And both of them, of course, are touching all-time highs earlier. The Dow Jones Industrial Average also in the red, 0.5% lower. And this as selling pressure intensified in the final hour of trading. And also, it looks like we've got some signs of progress on trade talks between the U.S. and Beijing stalling. And traders, of course, on the sidelines waiting for the Federal Reserve's rate decision. So let's check in now with Josh Gilbert. He is the market analyst at eToro. Josh, good morning. How are you doing today?
Yeah, great to be with you, Ryan. I'm great, mate.
All right, awesome. Now, let's check in with you first with your take on what's playing out in the markets right now. So overall, we've been seeing record highs in recent days, but now finally a bit of a pullback. Is that, I guess, a sense that there's more caution in the air right now as we wait for more data and I suppose a bit of fatigue happening in the markets?
Yeah, well, it's the start of a massive week. So we're coming in, as you say, on record highs. And when you're sort of set up the week that we have ahead, right, we've got a US Fed decision within the next 24 hours. We've got US jobs data on Friday and then, a massive run of earnings from the Magnificent Seven coming. So I think it's fair to sort of see a little bit of risk off coming from investors within the last sort of 24 hours. Some earnings coming through overnight that have sort of disappointed a little bit as well. But on the positive side, US consumer confidence did increase overnight as well. I think that eased some of the outlook for the broader economy and, of course, the labour market as well. So it's that sort of feel good at the moment. But, we've got a lot of, data to come through in the next few days that will drive markets.
Yeah, Josh, talking about consumer confidence, let's talk about what you're seeing from the earnings coming through in the latest session. You might say a bit of a mixed bag. We do have some disappointing numbers from the likes of Spotify as well as Starbucks. Walk us through what stands out for you right now.
Yeah, I mean, look, the consumer picture in the US is a bit mixed. We mentioned there about consumer confidence lifting, but at the same time, some of the numbers that we are getting through from, some of those names directly tied to the consumer have been a little bit weaker. So you mentioned Starbucks sales and profit falling more than expected. Spotify's numbers sort of coming through as well, weaker than expected, swung to a loss in the second quarter. And that sort of, again, losses coming from higher than expected costs. If we look at Chipotle as well, again, falling after, earnings missed expectations. So I think we are seeing a little bit of weakness coming through from that US consumer. And it's certainly showing up in some of those earnings. We've got Amazon coming through this week, which I think is a massive sign of what to expect from the consumer, as well as Apple. We're talking about one of the biggest names in retail and then one of the biggest names in the world for products in technology. So I think that will give us a really good look. But, for now, the US economy has held up really, really well. And that is why we are seeing markets at record high. But we are starting to see, maybe a couple of cracks with these earnings reports.
Yeah. How much are the tariffs going to be a factor in this round of earnings?
I think it'll be something that we listen to. Absolutely. It's something that we're going to keep an eye on. We've heard it across a couple of names so far already. We heard it from General Motors last week. They're the largest car company in the US by sales. Tariffs fueled about a 35% drop in profits there. So definitely having an impact across the way. Look, I think there's going to be headwinds, but I think what we're really seeing is that the tech sector, led by this growth in AI, is really helping drive markets, driving the tech sector, maybe, giving us a bit of a float, if you like, across the rest of the market. We also heard that, from Tesla as well, a couple of uncertain quarters coming up, a couple of rough quarters coming up, whether that might be due to tariffs as well. So while, as we said, consumer spending is resilient, we have heard, from those companies. We also heard from Coke and Netflix that, demand is softening a little bit as well. So tariffs for us are going to be something that we listen to. Is it feeding into inflation? We'll hear from Jerome Powell as well over the next 24 hours. It's going to be, I think, a dominant part of the earnings calls over the next week.
Yeah, and about Jerome Powell, he will be in the news in the coming days as we wait for the FOMC rate decision. By and large, consensus is for no changes. What are you going to be looking out for?
Yeah, I think that's it, right? The focus point here is that the Fed have stayed on hold throughout 2025, haven't had a rate cut since December. So the focus here is that we are seeing the Fed in sort of that wait and see mode. That sort of big source of uncertainty right now is tariffs and that sort of trade tension, right? We've obviously seen that US and European trade deal struck, the start of this week. We're still waiting for US and China to sort of strike a deal up. We know that that's been pushed back already. So for me, we're going to be looking at the commentary, right? We know that rates are going to be, staying on hold this week. So it's going to be on growth risks, how trade is, potentially affecting inflation. And I think any hint that tariffs are impacting inflation could mean that rate expectations are pushed back. So markets are only fully pricing in one cut this year. So that's something that we're going to keep an eye on to see if that changes in the next 24 hours or so.
All right. What would that do for the US dollar, which has been softening to some degree in the past year? I think year to date down some 8.8%. Where do you see it going from here?
I think, it depends on that sort of rate direction, right? So if we, have the expectation that rates are going to come down in the US, then we're going to see more weakness coming out of that US dollar. Whereas if we get a Fed that's slightly more hawkish, that's going to be, positive signs for the dollar. And I think from my perspective, I think short term, I think we are going to see the Fed take a bit more of a hawkish stance, just because I think we're going to want to wait to see how these tariffs play out. And I think that's what Jerome Powell is going to want to do as well. We know he's under a lot of pressure at the moment from Donald Trump. We know they don't have the best relationship, but ultimately we think that, they've done a great job so far. If we look at, what we're seeing from the US economy, if we look at markets, we believe they've navigated the US economy very, very well. So we think they'll take a bit more of a hawkish stance. We think that will be good news for the US dollar. But as I say, if we find out that inflation is continuing to trend down, tariffs aren't having that impact, rate cuts are going to come to the fold, and we're going to see more weakness in that US dollar.
All right. Lots to watch out for in the coming days. And helping us out this morning, Josh Gilbert. He is the market analyst at eToro. Josh, thanks for your time this morning. Thank you so much.
Thanks, Ryan. Have a great week.
All right. Catch you again next time. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.